Hey everyone, it's Evan here from the Trade Risk on Tuesday, December 5th here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Today's video, we're going to be discussing the outside bearish weekly reversal bar that is in progress across all of the major markets, except for maybe the Nasdaq. I don't think it had the outside effect. We got commodities under pressure, and we have financials that are still holding up on a relative basis, strongest of the bunch. We're going to talk about all of this and some more right now. All right, so we're going to jump in here with the S&P 500, the SPY ETF. You can see here on Tuesday, we're down 94 cents on the day. That's 36 basis points to the downside. And before we even get into that daily chart, we're going to go right to the weekly and take a look at what's going on here, the big picture. You can see we're down a little over $1 on the week, and we're down, that's about 0.5% here in the SPY ETF. Now, keep in mind, it's only Tuesday, so we're looking at a weekly chart. We're only 2 days into the week, so there's plenty of time to go. But as it stands right now, we have this outside weekly reversal candle in progress. And what that means is we gapped higher above last week's highs. We tried to push up, we failed, we went red, and so far back on the lows of the session or on the week and inside the range of last week's trading of last week's bar. So that's an outside reversal week. That gives us pause in the short term. That says, you know, we tried to go higher, we failed. We're now trading on the lower side. Sellers have a little bit of control here in the short term and gives us a little bit of a pause inside the context of a uptrend. Right, so this trend here on the weekly chart is still very much intact. We're well above the 8-period EMA still, which is above the rising 20-period moving average. Volume's good. Price action's been good. This trend has been strong. No technical damage here whatsoever on this time frame. So if you're on a multi-month sort of time horizon for this market, this right now so far is a blip on your radar. This is still kind of business as usual, riding above this nice light blue line. Back on the daily chart, things get a little more interesting, and this is where time frame is so important. And I think this week really is going to speak to time frame because it really depends on where you live as to whether or not you're really acting on what's developed here this week. So yesterday was the sort of day to take notice, especially if you're a short-term active trader. What happened yesterday was same thing on the weekly chart. We had this nice gap higher. Senate pushed that tax bill through. Markets at least reacted favorably off of the open. They tried to push higher here real early on Monday. They failed. We went red. We closed on the lows, and we got follow through here today. Yesterday, if you're an active trader, this is basically your hallmark sign of a market that is extended or exhausted and is painting this nice picture of a reversal, an actionable short signal if you're a disciple of price action or studying price action trading. So you would have been short yesterday on the close. You would have gotten some follow through today, and that trade would be working out. So short-term traders, that's your action area. If you're on that intermediate term time frame, you don't have a whole lot to be concerned about yet. We're still above the 8-period rising moving average. So we need to, again, keep things in context. We're above the 8-period daily, which is above a 20-period daily. So you have bullish alignment. The trend remains strong here on the daily chart as well as the weekly chart. And if we just basically scroll it back here and we take a look at all this action, you can see we have been getting retracements back into this yellow line, which is the 20-period moving average. Going back basically all this year, we've broken it a couple of times throughout 2017, but largely that is where support sort of steps in. So if we look at this chart here and where the 20-period aligns, that is where we saw this real wide range candle on Friday down around 260 or so. That coincides with the lows from last Friday. 20-period is there. Can we get back down there and retest that level? That would probably be a real reasonable action or development here in the markets. And even if we did that and we successfully held that level, then we would still very much be in this bullish trend, and we could have a pullback, a shallow pullback within the context of an uptrend, and life goes on and the bulls are happy and the sellers get a little bit of action in the short term. So I think time frame is very important. I'll say again to the sort of bear case here that another thing that has is crept in here are the ranges that we've seen recently. Take a look at the S&P 500 over the past 5 or 6 days. Compare the size of these candles, particularly even don't forget about Friday, just because you get a long tail down here, not a big body. But you look at these intraday ranges and then take a look at all of this trading over the past several weeks and months. It looks quite a bit different. We're seeing an expansion in range. We're seeing a little bit of an expansion in volume. You got to go back to summertime before we saw some ranges like that, where we saw a little more two-way trading back and forth. So the character you can see is kind of settling out here, changing, morphing just a little bit. Will it materialize into something larger? That is something we, of course, need to wait and see. I would say the first line of attack, defense, line in the sand, if you will, is this 261. Again, that's the lows from Friday where the 20 period is. That seems like a reasonable spot and an upper level spot where buyers would want to step in to keep this market sort of afloat and as strong as it can possibly be. Below that, you have this little range that we broke out of around 259. You got more major support around 256. So really, as we start to look at potential pullback scenarios, we have multiple layers of support where price has been holding over the past several months now, and that's where we'd want to start to measure those levels depending on your time frame and how active you are. That would dictate your exposure, your trade decisions, into your specific strategy. So that's basically, what I'm looking at here in the S&P 500. We've got a little bit of a change of character based on the size of these candles, based on the outside reversal, a little bit of follow through today, a little bit of pickup in volume. So you have some things there that are, changing a bit. So if you're a swing trader, maybe you're dialing back a little risk. For me, for my time frame, I'm not looking at getting aggressively short right now, just looking to raise a little bit more cash, letting the dust settle, but I still want to have some long exposure on as this trend remains very much intact. If we go to the IWM, you can see here again the sloppy kind of trading, larger ranges still developing here just a bit. It's the same exact pattern. You had this outside reversal yesterday on Monday. You got the follow through today. This market's at more of a critical juncture here, right around this 150 level. We certainly undercut it last Friday, but I always like to look at these prior breakout highs here, and we could see where we broke out from was late September, early October, right around this 150.50 level. That's where we came kind of cannonballing through just a few weeks ago above this level, and now we're starting to come back down and retest it again. If we got a weekly close back below 150, that would be concerning to me, that the small caps failed to really break out here and we would start to close back below 150. We certainly are not there yet. Again, we're looking even at a weekly chart as we just were, and it's only Tuesday, so let's keep that in mind. But I'd be paying attention to this 150 level. It's only 1 point below price, so that's about less than 1% away. So let's see if it gets back down there, how it reacts, what the volume looks like, and what kind of closes we see. Finally, the Nasdaq. If we get to the Qs here, you can see had a rough start, didn't quite have that outside reversal because in fact it already started weakening up a little bit more than the other markets last week, and you can see it kind of opened up still within last week's range, and you can see it's still holding on to the lows of last week. It's down 1% right now on the weekly candle, but if we go to the daily chart here, you can see this 152 is an important level. We've tested it actually multiple times already, going all the way back to really Thursday on the 9th of November. Then we had another sort of test and undercut on the 15th. We came back down pretty darn close to it last Friday, almost yesterday again, a bit today. So there's a lot of sort of interest or eye watching on this 152 to call it 152.50. If we started to break below there, notice also the moving averages starting to get a little more steeper on a potential crossover there on some of those fast MAs. So those things really combined would give us a little bit more concern once again if we started to break below 152. Don't forget there's a gap right down here from the 27th of October that may want to get filled in short order if we start breaking below this 152. So that's basically the market environment overall. I think you have some changes of character that you want to pay attention to. Depending on your time frame, you may have already taken action. You may not care at this point. You're still waiting for more damage or real legit support to be violated before you take action. That will all depend on you and the individual trader, of course. So that's the environment. Let's take a look here at some of the other major markets. We got TLT, which, you know, that safety kind of trade, that safety haven is rallying. We're up 0.5% here on the week. This overall picture is still a bit messy here, but bulls short-term trend remains higher. We had this very sharp kind of drop here late or mid last week. It recovered very sharply, so equally as quick on the upside, and you can see we're starting to make new daily closing highs here that we haven't seen going all the way back to basically September or August of this year. So getting above a lot of this chop, trying to get some more sustained, a cleaner trend for TLT would be interesting. That's probably what we would need to see here. It's still kind of messy and just kind of holding on back and forth, lots of kind of jagged trading in here. So it's still not that appealing to me, but I would be respecting the short-term trend there if I were participating. USO, go to the commodities next. You can see up a little bit today on the week. It is down a little over 1% here. Inside week for USO, kind of developing potentially this upper level kind of support in here right around the 20 period moving average, around 1135 or so. If it started to drop below here, that would be a bit concerning, as it basically failed to hold above these early November highs. So far it's holding it. Let's see if the bulls turn this into a little bit of a sort of a consolidation pattern up here before it continues, or if the more bearish scenario, of course, is if it drops through there and starts to undercut this $11 and these prior pivots. That wouldn't be so pleasant for USO. UNG, on the other hand, is basically doing exactly that. Sellers are in control here. It is violating support. It is making new year-to-date lows. Volume isn't super crazy here, so it doesn't look like we're at any definitive bottom from a volume perspective. A very high volume washout bar, sometimes like natural gas, you get in the past, kind of like this August bar here with a ton of volume that comes in. Still not seeing it. We are seeing heavier volume, but that's sort of to be expected as this continues in its downtrend. So for now, sellers in control here for UNG. We talked about this range below 585. It's basically a short, or looking at short possibilities or spots to get short. Above 645. You'd want to participate on the long side there, and so far we're of course getting the downside. If we go to the metals next, GLD had a tough day, 71 basis points to the downside, and look where it's trying to hammer out. It's right at the lows here from October, the 26th, 27th, right around this 120 level. You can see volume starting to come in a little bit. This is an area that's been holding for quite some time. If it starts breaking below 120, I'd want to be very cautious here in GLD. Sellers would be very clearly in control. You could say they're already in control right now. And then silver, again, it's kind of like think of USO, it's almost like USO is acting like gold, where it's still kind of holding up. Silver and natural gas are on their breakdown down. So silver continues lower here, 1.36% to the downside. Fast moving averages are bearishly aligned, well above price, and heading lower pretty fast. That's some bearish action there in SLV. I'd want to be very cautious and not looking to pick a bottom or be a hero there in SLV at this point. So those are the commodities. Those are some of the major markets there. All tend to be under pressure. USO is kind of holding up best in class right now, but commodities in general are feeling some of the pain this week. So if we get into some of the major markets here, or some of the sectors rather, IYT down today 1.39%, but on a relative basis, just again, take a look at where this is relative to some of these fast moving averages. Even the 8 and 20 period daily chart, daily moving averages here, it is still well above those levels. And if we look at that weekly chart, again, well above all of these moving averages, as well as it really accelerated higher and shot to new highs here. So IYT is pulling back, but it's got some good momentum and volume on this recent breakout. This is generally looked upon as an opportunity to me to position long in something like this that has recently broken out on strong volume. Let it kind of pull back to some of these fast moving averages to check back and look for some opportunities to get long. It could completely unravel, right? It doesn't have to hold up as a higher low, but I tend to like the odds in those types of scenarios. XLY, very similar here. Discretionary has been off to the races. Lots of volume been pouring in here. This trend's been real strong on a breakout above this 92.50 area. And you can see again, it's filling the gap, pulling back again today. It's in the red, closing on the lows. But again, something that I would look at as an opportunity as it starts to pull back here in this strong uptrend. Financials also. Lots of volume has come in here over the past several days, over the past week or so, down today, but still on a relative basis, still holding up well above all of these fast moving averages. So, you know, again, it's a sector that I would be paying attention to. Energy, same thing. Not as clear. It's not running away here, but it did make this nice breakout above this $69 level and above this supply in here from late September, early October. And I like it as long as it's holding above there. You can see the 8 and 20 period moving average, those fast moving averages on my charts, starting to curl back up, supporting below price. So the longer we can hold up above 69 or so, that looks good to me. Finally, XLP on the upside, seen a lot of rotation come into the staples here. Take a look at this weekly chart. Basically came out of the most hated sector and underperforming on a relative basis to start the month of November, and it's just skyrocketed higher, taken out resistance, and is, you know, very close to actually retesting these prior highs here from June or so, May or June. Yeah, it was right around June. So staples, you know, maybe a little overheated there in the short term, but lots of love over the past couple of weeks. Now, on the downside, we have the semiconductors, which are still struggling here. I believe they are below last week's lows. They're right at last week's lows, so almost potentially getting a follow-through week to the downside here. And again, on this weekly chart, take a look at how strong this has been. It hasn't tested the 20 period back since August on the weekly chart, so maybe a little bit more there in the semiconductors would be healthy, but a good amount of volume coming in. And you can see that all the accelerated trend lines have broken, and we're looking to see where this higher low comes in. Maybe it has to go down to 160, 150. It's basically a time where, you know, in my opinion, you don't necessarily want to be a hero here. You want to kind of wait until you see a little more of the dust settle, let that range start to contract a little bit. These ranges are high right now. They're expanding to the downside. That's generally not a time where you want to be trying to pick a bottom. So just be a little bit cautious and selective there. And finally, on the downside, XLK. Yeah, so XLK on the downside here, you can see basically flat today. It did actually, you know, have some relative outperformance. A lot of those big cap, high beta tech names there were outperforming today, or were trying to hold green. So XLK did try and hold in there, but it has suffered some damage here over the past several trading days. You can see it's trying to stabilize, still well below the 20 period moving average, which is about to get that 8 period cross underneath it. So some bearish developments there, and we'll have to see if the bulls can step up and defend this position here in the XLK. So that's what I had for today's video. Hopefully you guys are navigating this okay. We're coming into the end of the year, so I would expect things to quiet down, but if we, you know, continue to see events unfolding or catalysts happening, then you know, we could see a pickup or some more volatility into the end of the year. I tend to think it's usually the other way around, though, so we'll have to see how this week ends up shaping up. So hopefully it's been helpful. If you like the videos, do subscribe to our channel. Click that like button, subscribe button in the bottom right hand corner. Keeps you up to date with all the latest that we put out on a day-to-day, week-to-week basis. Thanks so much for watching, and talk to you again soon.